Okay, so we continue then with a question. This is question 2 from tutorial letter 103 for FAC 4862, Candy Limited. This is just an extract of the question. The reason I chose this question is just to show you how and where you can find indicators in a question for your solution. Even though this question addresses quantitative disclosure, I would like to use it to highlight some aspects of where you can find information for qualitative disclosure. So Candy Limited wholesales chocolate and other candy bars. The company is now trying to introduce a new line of revenue, which is the sale of health bars. The manufacture and distribution of it as well. And the year end is 31 March. So there is revenue from goods and services provided, the sale of health bars, sales of chocolate and candy bars, and distribution services. The health division of Candy Limited is trying to secure a contract with a supplier for the quality health bars and place an advert in the health magazines to procure a supplier. Candy Limited then found a supplier and transacted with them on the 30th of November 2014. The expected revenue from the health bars is 3 million health bars sold over 3 years starting from 1 Feb. Remember, the year end is 31 March, so that leaves 2 months of sales in the first year. This is disclosed as revenue in the statement of comprehensive income and profit and loss. So remember, the disclosure requirement is at the entity's discretion. If they would like to aggregate this revenue with the revenue from chocolate sales and revenue from sales of other candy bars. This is just the quantitative aspect. These are then the costs incurred to obtain the contract. Looking at these costs, you will see there is consultancy fees to get some market information. Then Candy incurred some costs to set and print out the proposal, and then travel costs to go and present the proposal. So up to this point, Candy has incurred these costs, but there is a 50-50 chance of getting the supplier and not getting the supplier. Then these are sunk costs. They are costs that will not be recovered and will be lost whether the contract is procured or not. Then we have commission to sales personnel. So these can be recovered, but only when sales of the health bars begin. But we would not need the additional services from the sales personnel if we don't get the supplier, because then there's nothing to sell. So the commission cost is considered a cost that is needed to fulfill the contract. This cost may be capitalized as a contract asset and then realized as the related revenue is earned. And this is then disclosed separately in the statement of financial position. So for qualitative disclosure, you may need to give some details of how the contract asset arises. Then more information in the question tells you that the cost to manufacture is 6 Rand per health bar and the selling price is 7 Rand 80 per health bar. Candy Limited allows for the products to be returned within the first 2 months of purchase for a full refund. So again, this is qualitative information. It creates an expectation in the customers, so the entity needs to account for this possibility. And as discussed in previous slides, this is the detail that will surround the qualitative disclosure regarding uncertainties. So the company needs to plan for possible returns. The expected returns are at 2% of sales. Since the first year end is 31 March, we then can calculate the amount it would have an effect on. So we only begin sales on 1 Feb. So the sales until 31 March is 675,000 for 2 months at 2%. What are we calculating here? We are actually calculating the variable considerations, and the returns are the uncertainty. But we have expectations and we base our estimate on experience and expectations. So this is the amount to be disclosed as a contract liability. So the required for this part of the question, remember that I said this is an extract of another question. So the required that pertains to this part of the question required to present the statement of financial position of Candy Limited with regards to the transactions in the health division only. What have we identified from the information so far that belong in the statement of financial position? We know that there is a contract asset for sales commission and a contract asset and liability for refunds. We have also discussed how the qualitative information is then extracted from this. So the disclosure will look like this for the amounts to be presented, right? So we have the contract asset, right of return in the current assets for the cost portion of the items that we expected to be returned in the current year during February and March. That amounts to 13,500, and the related contract liability at the sales amount that would possibly be returned is recognized for Feb and March of the current year. So as you can see then, the contract, non-current assets and current assets relating to sales commission is recognized and shown separately from the right of return. These are calculated based on percentage revenue recognized over time. So we also have the timing of the transfer, which will form part of our qualitative information disclosed. Therefore, the current asset is calculated using the 675,000 at the remaining 10 months of the first year and 2 months of the second year, and is calculated using total revenue expected for the second year. This gives the portion of the commission cost attributable to the next 12 months after year end, which represents the short term and is disclosed as current asset. Similarly, if for any reason there is an impairment loss to either of these contract assets, then we will account for them separately and ensure that the impairment loss line item in profit and loss is not aggregated with any impairment loss of each of the contract assets, as required by paragraph 113 part B. Don't forget that this solution is just the quantitative disclosure. It is not required in this question, but for interest's sake, where would you have the qualitative disclosure for these items? So if not presented anywhere else, you would have it in the accounting policy note. This is where you would describe these line items by explaining the nature, timing, and uncertainties surrounding these contract assets and contract liabilities. So this is then the calculations we've just discussed. You can see there under contract assets, the original asset cost of 141,174. Then we amortized it for that 2 months and we get the unamortized portion. We then have the short-term portion for the 10 months of the remaining of the current year and then 2 months of the next year. So that's the next 12 months. And we got our figure for the short-term portion of the asset. So your long-term portion of the contract asset would then be the 101,449. Then we look at the right of return, which again we noted that it's accounted for separately. Here we calculate at the 2 months sales that we've made, the expected returns for that 2 months is at 2%, and we calculate the contract asset for that at 6 Rand, the cost price. The liability of that is at the selling price as discussed. So that brings us to the end of the presentation. I really want you all to go and do illustrative example 41, 42, and 43. And you may then post questions in the chat to this session regarding those illustrative examples, because these are the only illustrative examples that relate to disclosure paragraphs, and it's a good way to iron out any confusion you may have about revenue disclosures. Because remember, in practice, what it comes down to is what you need to assist your clients with disclosing in terms of IFRS. And obviously, to do disclosure, you need to know what and why you are disclosing something. So this then requires you to know the 5 steps of revenue. So this section actually encapsulates it all quite nicely. We can take questions now. As mentioned earlier, I have set the chat to remain open after this session. So you can ask questions even after you've maybe worked through the section and the examples for today's presentation. And my colleagues and I will then be able to respond on the chat as well.